From the morning reading, oil rallies, energy leads the SPX, diamonds, IWM, spiders make new closing high as the Qs near horizontal resistance. 9 of 10 sectors moved higher on Monday. XLE, XLB, and XLU were the strongest sectors, while XLRE was the weakest sector. Oil futures were up $2.01 to close at 48.33. Breadth strengthened as advancers led 2253 to 754 on the New York Stock Exchange and led 1634 to 1122 on the NASDAQ. On the S&P 500 snapshot, a record close. The S&P 500 finally matched its cousins, the Dow and the NASDAQ, in setting a record close, finally breaking its previous record close of August the 15th. The index broke that previous record in the opening minutes, briefly slipped back below that benchmark, and then rallied to its afternoon trading range. Another pop in the final minutes lifted it to its 0.77% intraday high shortly before the 0.75% official closing tally. The yield on the 10-year note was little change, closing at 2.33%, down 1 basis point from the previous close. With the S&P 500 hitting the new high, the chart shows it clearing its August high to reach the new record. The NASDAQ Composite Index did the same. That leaves little doubt that the market's trend is still higher. The fact that it's being led higher by economically sensitive stock groups like energy, materials, industrial, small caps, and transports is a sign of strength. The fact that technology stocks are starting to strengthen again is also a positive sign. What's especially impressive in today's rally is that commodity-sensitive stocks is taking place in the face of a rising dollar, although the dollar pulled back today. In suggestions from last week that the rising dollar might have a less depressing effect on economically sensitive commodity groups like energy and materials, prospects for an OPEC production cut and infrastructure spending appeared to be trumping the impact of a stronger dollar. While the rally looks impressive, the steep upward trend is difficult to maintain, especially if volume doesn't pick up and excitement stills. More than half the upside breakouts above resistance result in a throwback or snapback toward the breakout point. The indicators continue to suggest a short-term breakdown or throwback followed by higher prices in the intermediate term. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:06 a.m. Mountain Time, and I am recording this in preparation for the market day of November the 22nd, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and get into the morning report. Okay, there we go. At the time of this cut, all four of the U.S. broad-based indices were up, with the S&P futures up about 0.25%, the Russell futures up about 0.33%, NASDAQ futures up almost 0.5%, and the Dow futures up a little more than 0.25%. Crude oil gave back a little bit of its yesterday's advance and is down about 0.4%. Euro is essentially on scratch. The bonds are up about 0.5%, and gold is up about 0.4%. In overseas action, you have China up almost a full percent. Hong Kong's up about 1.4%. Japan's up about 0.33%. Germany's up about 0.2%. And the United Kingdom is up nearly 1%. And macroeconomic reports of note for the United States today, you have existing home sales. And looking forward to tomorrow, there's a pretty good set of reports. Core durable goods. The weekly unemployment claims is moved forward one day from its normal Thursday to Wednesday due to the holiday. You got durable goods, new home sales, University of Michigan consumer sentiment, and also crude oil inventories and then nat gas storage. As if that's not enough, you also have FOMC meeting minutes. So a very, very full slate of macroeconomic reports on the schedule for tomorrow in advance of the holiday closure. Current volatility conditions. Short-term VIX actually went up a little bit yesterday to a 10.0. Skew, though, dropped below the caution threshold and is now back to benign. IV percentiles are all exceptionally low. The S&P at a 15, the Russell at an 18, the NASDAQ at a 14, the Dow at a 16. You did have standard deviation moves put in on 3 of the 4 indices yesterday. The S&P, the NASDAQ, and the Dow were all up by more than 1 standard deviation move on a close-to-close basis. And then let's go ahead and go to the charts. And you see yesterday's action, very important. After having bumped our head against the ceiling of resistance for several days, we had a very convincing close that was up above the entire area of resistance and a new high close. All-time high close. In addition to that, it's built on that in last night's overnight action, getting as high as 2203 and is currently trading just a few points below that, around the 2198 area at the time of this video recording. We've got about a little over an hour away until the cash open. We'll see if we get confirmation by all market participants or not. This is very significant, and anytime you make a new closing high on the S&P, it's a big deal. And given our action of the last 2 years, while we've had these kind of incremental new highs, they've been many months apart many times. This high here was made after 15 months of relatively sideways range-bound action, and then this time we had another 3 months. In between that action, we had August correction, December correction, January into February correction, and then most recently the brick set, and then the pre-election. So we've had like 5 significant drawdowns, while we've made in that same period of time 2 very small incremental new highs. So I got to kind of balance all this. I'll certainly be looking for greater confirmation, and really what I'm looking for is a series of higher highs and higher lows to really tell me that we're in a normal bull trending market. Now, obviously, new information came in with the election and the expectation of a very different business climate for the United States, and that's had a dramatic effect, and sector rotation has occurred in a major way in those trading sessions since. And this whole reset is, remember, your stock prices are based primarily on the future expectations of profits and earnings, and those future expectations have had a huge change with the election result. So this could be for real. At the same time, given the last 2 years' history, we want to make sure that before we just kind of go all in and start doing all kinds of speculative swing trades and all those kinds of things, that we gain confidence and we kind of accumulate the positions over time as we gain more confidence in this trend. If it's a real trend, and this is going to be, a series of quarters where infrastructure spending is increasing and so forth, this is not going to be over in a week or a month even. This should be something that should persist if we're truly heading down that road. So it's not necessary to feel that you're going to be left behind, and at the same time, we'd love to see some confirmation here. So that's kind of the balancing act that we're going through right now. But this is very, very impressive. Short-term action for the bulls is super strong. And you see, you also had a new closing high in the Dow yesterday, and then another one last night on an intraday basis, taking the Dow up over 19,000 for the first time. NASDAQ also as we look at it as the NASDAQ futures, we're up near resistance. If you look at it as, let's see here. I don't know how the toss chart uses the comp Q, but anyhow, the NASDAQ composite's actually showing a new high, and but the NASDAQ futures show us up near resistance. Either way, the NASDAQ certainly has made strong advances in recent trading action to catch up. And it's very, very good news when you see the more growth-oriented parts of the world are taking off, and certainly the NASDAQ and then the Russell. That was the third index yesterday that set a new all-time high, and you see it's actually probing the top of this channel. So this is extremely strong. We've gone from the bottom of the channel to the top of the channel, you know, straight up. I think it's 12 sessions now without a red candle on the small cap Russell. So that also pretty amazing. Now, one of the things to think about here is, you know, would you expect this to start to retrace since it's up against a channel that's, you know, had an enormous number of touches, seems to be well expected place for resistance. And it could do a couple things here. Now, we've seen in the past where it's had a big run from the bottom up towards the top, or from the near the bottom to the top. And then sometimes it does pull back. Sometimes it goes into a sideways consolidation. And then sometimes it just continues to move up like it did here in kind of a slower pattern, but still running up along this this resistance area. So it's hard to believe that we're going to repeat this in the next 12 days, that's for sure, while at the same time you have to respect how much bullishness there is here. So multiple indices setting records to be respected. Crude oil also very, very large day yesterday, up over some 2%, and it's taken us back certainly towards the top area of this cloud. And if we get a cloud breakout, then we're probably heading back to the 52 area. So we're kind of in the middle of the primary trading range, of the shorter trading range, and a little bit to maybe 2/3 of the way up the trading range from the longer term trading range. So I wouldn't make too much of this. We've had these other big candles that have just moved us up and down within these areas, every little whiff of a rumor from OPEC. And this is what was driven crude oil yesterday, was the thoughts that OPEC would have some production limits come into place. Those have been very hard to enforce in the past, but that's still, you know, that just that thought that there would be limits to that, you know, certainly drove crude oil yesterday. Gold, of course, also is similar impact and had a little bit of an up day and a follow through today, but on a relatively much smaller basis. The dollar did pull back yesterday, and short term, that's a bit of a bearish pattern. We may see a bit of a retracement on the dollar in the short term, perhaps setting up a bull flag for the next leg up. And then bonds also had a short-term bounce yesterday, but a much smaller move than perhaps the move that you would have associated with the other markets. Volatility, as you would expect, getting very low. You see the recent low is right here at 11.02, and yesterday's action got down to the lower 12 handle. So we could very soon, especially with holidays, could see some action dropping. Now, normally when we head into a holiday, we expect that things kind of dry up and often go sideways, but there are a slew of macroeconomic reports, including FOMC minutes, scheduled for tomorrow. So it might actually be quite active heading right into the closing of the Thanksgiving holiday. So keep that in mind. This one may be a little different holiday setup. Okay, that's enough on the charts. Let's go ahead and go to the daily report. And we continue to see more bullishness come into here. We've had a change in the intermediate term phase opinion. We're now market phase 3. Bull Flagville is your descriptor. So obviously bullish there. The 3 market timing signals, the first coming from IBD, confirmed uptrend. That's bullish. GMI index, a perfect 6 out of 6. And the GMI2 is even a 7 out of 8. That buy signal has been in place since 11:10. So the second signal going bullish. The third signal is the one that's been the most detailed in the nature of the signal, and that it breaks down the 3 time frames. And we've been concerned about the lack of a stack, but we also have been recognizing that things have been dramatically improving here, and we've had a whole series of improvements with the short term on all 4 indices now, all absolutely bullish, and the intermediate term, we now have 1, 2, 3, 4, 5 of the 8 signals have now turned to bullish. So we still have a mixed signal on the intermediate term on the S&P 500 and the 100, as well as the NASDAQ. And then, of course, we have these mixed signals on all 4 on the long term. But still, the change, we talk about change and rate of change and rate of change on the decision point scoreboard has been very, very impressive in the last some 2 trading weeks since the post-election period. And things have really started to line up. Don't have that stack yet. We can't really call this a normal, healthy bull market yet, but it's certainly heading that way at record speed. Position sizing opinions are both set at 100%. Intermediate term market posture on all 4 indices are all up over 90 now. They're all severely strong bulls and supported by a weak bullish sentiment line. The hedge warning status has changed. It has dropped to a 0+. I really debated whether to stay at level 1, and we still don't have the stack, and it's not even clean on the intermediate term. But given all the other signals that we've gone to phase 3, the first 2 market timing signals have clearly signaled bullish. And we've got, intermediate term market postures, and then the various specific warning sections are all set back to normal and very strong bulls status and so forth. I went ahead and dropped this to a 0+. Now the caveat here is we're looking for confirmation that this breakout on the S&P follows through and doesn't break right back down with the false breakout into the trading range again. And that we get a retracement wouldn't be surprising given how far we've gone. But if we do have a retracement, we're going to watch how far that is and the nature of that retracement very carefully. So this level 0+, you could really think of this as kind of on the threshold between 0+ and a level 1, recognizing that things have been improving pretty dramatically, but it's just how dramatic and how fast that's occurred, that's a little concerning to be able to call this a normal, healthy bull at this point. But got to recognize that a lot of these things have certainly ebbed off. Specific volatility-based warnings, you see the only thing that's still here is the NASDAQ at a relatively high distribution day count. Trend-based area, very strong. In fact, these are all strong bull trend-based settings. Risk aversion indicators, all 5 is risk on. Sentiment up to a 67 now, so we're starting to move towards more of the greed aspect in sentiment. In terms of the specifics around sectors, you can see it's pretty much a wall of green there yesterday, with energy leading the way at up over 2%. Materials, though, up over 1%. Utilities, information tech, also up over 1%. Even things like consumer staples having a virtually universal green day. Only 3 companies were down in that sector yesterday. Really, the only thing that was down was real estate, and that was just below scratch. Pretty nominal kind of weakness in that one. And the market postures, you see the effect of the sector rotation, the consumer staples, the healthcare, the utilities, though seeing some improvement, healthcare and utilities both improving. So, eventually, even with sector rotation and a rising market, everybody rises. It's just to different degrees. And you see those different degrees as we look to the next chart as our percent change. And then, of course, yesterday, energy, look at this now, green across, information technology, all time frames green. Of course, the S&P, as you would expect, all time frames green, given that we had a new record high yesterday. Consumer discretionary, industrials, financials, all showing green all the way across. Healthcare and real estate are the two primary laggards, so should get a pretty good feel between these graphs as to where you want to be dialing in your watch list and examining specific industry groups or specific companies for the best opportunities. And then also, if you were to be playing any kind of weakness at all, where the reverse would be. But given that this market is becoming so strongly bullish, playing for weakness would be probably a tougher road to hoe at this point, because even the weak ones are having positive days at this point. Okay, that's probably enough for today. We're right over 20 minutes. So let's go ahead and roll this up. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. We'll be back here for tomorrow morning with the next market preview from Falcon Global. In the meantime, manage that risk profile. If you do that, you'll see the consistency that you're looking, and then seek to each and every trading session learn something about your craft. Good trading.